Welcome to Paladin Financial Talk. I'm your host, Jeff Quick, and I'm joined here today by my co-host, Mr. Dr. Professor Tony Shore.
Oh, man, the professor, doctor, what an intro today, Jeff. Holy cow.
You deserve it. You work hard.
Sure. Well, yeah, I did. That's true. That is a good point. I have been working hard today. It's been a crazy busy week. You and I were talking before the show. I normally on a Thursday don't feel completely wiped out, but this has been one of those weeks.
Yeah. Happens.
It does. So what are we talking about on the show today, Jeff?
Well, I believe we had a little tax talk last week, and we're continuing on with that topic, focused more on business tax deductions and some deductions that are available for business owners.
Oh, wow. Okay.
Yeah.
So deductions for businesses. All right. Navigating these business tax deductions. You want to have financial success. One way to do that is minimize that tax burden. And businesses, it's a whole new ballgame if you're a business, right?
Yeah, there's some different opportunities there. And, before we get started, Tony, I must say I am not a tax preparer, CPA, enrolled agent, or licensed attorney.
Right. You are a financial advisor, and you look at the big picture.
Correct.
And you're just passing along some information that our people might want to be aware of. But I think it's always good, Jeff, for our viewers and listeners out there to make sure that they have a good team in place, a good CPA.
Yes.
And someone to look at that big picture. Just a CPA, they usually look at what's going on now and maybe looking back, but you need somebody looking ahead as well. And that's
100%.
why I encourage our listeners out there to work with a financial advisor like yourself.
Yeah, absolutely. It's important to have all those different aspects working for you. And, at Paladin, we really specialize in that pre-retiree, retiree type of individual where taxes are one of the largest expenses they're facing. So it's a huge part of the planning that we do.
Yeah, that is huge. And so where do you want to start? How do you want to kick this off?
Well, let's just start simply. What is a tax deduction, right? They're simply expenses that can be subtracted from your business income. And if we in turn are able to reduce your taxable business income, this will mean you pay less taxes and ultimately put more money in your pocket.
That's what we all want to do, right?
Absolutely.
Yeah, and especially if you're running a business, that's definitely part of the game. I just think that's right. Business owners have to take advantage of things like tax deductions to minimize their tax liability. So how does this work?
Yeah, so there's a lot of different pieces there, Tony. There's a reason business owners can earn a great living. They're taking on a great amount of risk. And for that, they want to make sure they're getting all the deductions that are available to them. So it's a big component of it. There's a number of different deductions out there, right? Everything from your operating expenses, office supplies, insurance. There's a number of things and costs that can be deducted from your business income to help reduce your taxes.
Okay. Well, and that's what we all want to do. That's the bottom line again. So obviously, if you're independently employed, if you're a contract employer or self-employed, I should say, there are a lot of things you can write off. Home office use. I remember when I was self-employed, we had a separate entrance to our basement where my office was, and
Sure.
my mom's a CPA. She said that gets you an extra discount, and I was doing work for record companies. I was doing independent radio promotions and marketing for labels, and so I would be able to write off, I think I mentioned this on a past show, but music magazines like Billboard and things like that, even music purchases, a portion.
Sure.
Yeah, because it was part of my livelihood.
Part of your business, sure,
Yeah.
absolutely. And that's a key component. A lot of people think we have more and more people working from home now.
Yeah.
A lot of people have that question, can I deduct my office expenses?
Sure.
It gets a little bit tricky. It should be
Sure.
dedicated office space, right?
Yeah.
You mentioned a separate entrance. I think that helps as well to
Yep.
establish that as a business
Yep.
separate from the dwelling.
Yep.
That helps, but you want to document everything as well. Write it down, percentage of business use. Maybe it's not 100%, but a certain percent can be
Right.
deducted.
Yep.
Again, you want to work
Yeah.
with a competent tax professional to help you navigate these things.
Yeah, it wasn't 100% that we were able to deduct, but there was some, and I think a lot of people might be surprised by what they can deduct. But you do have to be careful. You can't just start deducting willy-nilly like, oh, I work out of my house, I can write off my mortgage or something,
Correct.
It doesn't work that way, and you don't want to get on the bad side of the IRS.
100%. A couple of key things to look for as a business owner. A lot of times you're going to pay yourself a salary. You want to make sure that salary is reasonable for the job you're performing, right? You can't be, business owner bringing in, $5 million worth of revenue and you're paying yourself a $20,000 a year salary as president of the company. Right?
Oh.
It needs to be reasonable compensation. That
Sure.
makes sense.
Sure. I thought you were going to go the other way. I can't bring in $5 million a year and pay myself $4.9 million a year.
Well, there are people that probably do that, Tony. Yeah, so a lot of things can be deducted. Meals, entertainment, business expenses. If you're out having lunch with a potential client, you can deduct those meal expenses. You do, again, want to document it, where you went, who attended the meeting, topics that were discussed, just in case you do get audited down the road. The more documentation you have, the better chance you have of having a successful audit if you're unfortunate enough to have to go through one.
Sure. Yeah. You don't mention the A word. That's a dirty word.
It is a dirty word.
Audit. Nobody likes to hear that, especially a business owner, right?
Yes.
Right. So what's next?
A couple things. You mentioned professional fees. If you do have subscriptions to professional magazines, that is one, right? Pens, paper, all that stuff you're utilizing for your business expenses. Professional fees. Did you know that you can actually deduct your tax preparation costs on your tax return?
Really?
Right?
That's
Yep.
one I didn't know.
Yep. Attorneys, right? Any of those services you're using that are business related typically can be deducted.
Wow.
Depreciation of assets, right?
Okay.
You know anybody that's a realtor, Tony?
Yep.
I bet you they drive a great big SUV, don't they, or a large vehicle?
Yes, they do.
Typically fairly new,
Yep.
right? So that's something that can be deducted. A lot of times you'll see self-employed individuals, realtors specifically for whatever reason, end of the year, they've had a really good year, they need some business deductions. They may go out and decide to purchase a vehicle for business use. It helps if that vehicle is over 6,000 pounds, right? Then you can deduct, I believe it's up to $25,000 of the cost of that vehicle. So don't quote me on those numbers. I didn't look them up today, but weight matters, business use. You can deduct mileage. There's different ways to deduct those expenses.
Yeah, our neighbor right next door is selling his house, and I always see this huge GMC. I don't know, it's like a Suburban or whatever, and it looks brand new. I mean, I think it's got dealer plates on it, and he's a realtor, so it's just like, okay, and it's a huge vehicle.
Yep, that happens all the time.
Yeah, that's interesting.
Interest expenses are another one. Maybe bad debt. Right? Maybe you had invoiced a client for a particular service. You were never compensated on it. You can deduct some of those bad debts. Any type of educational expense. I've spent the last couple weeks here doing a lot of continuing education credits to maintain my licensure that I have.
Sure.
All those costs can be deducted. So again, track those things, keep receipts, store them in a safe place, whether that's using maybe you take pictures of your receipts and store them electronically. I know that tends to work better. I've pulled out receipts that are, a year old or more to bring into my tax preparer, and I can barely read the ink on the receipts anymore. Sun damage or just, sitting in a drawer somewhere. So it's nice to take that fresh picture and have that documented.
Yeah, that's
as well.
true. Yeah, you wanna save any and all documentation and maybe make a good picture of it or scan those in.
Yes.
So there's no problems again with the IRS.
Yep.
Yeah.
Documentation is the key. You definitely want to have proof. It also helps to have it in your calendar. When you have multiple things that match up, your calendar, says you had an appointment with Tony Shore to do a radio show, right? We have lunch. We had some coffee. We deducted those things. We talked about taxes. The more documentation you have, the better chance you have of having that successful audit.
Yeah.
Again, if it happens.
Yeah, and especially, some big purchases like a computer.
Yes.
If you purchase a computer for your job, monitors, equipment, any type of equipment.
Correct.
Is really important. And educational costs too, and even for my kids, I know sometimes my wife and I would spend money on new computers and things for them, and there were certain tax deductions if you reach a certain point.
Sure,
Yeah.
sure. Yep, absolutely. Those are all good things to keep track of. Let's see, what else do we have, Tony? Some things maybe you can do on the front end, right? If you're looking to maximize some deductions coming through, it really just pays to plan,
Yep.
right? Any type of savings that you're doing for retirement, there are a lot of different plan options available to a business owner that aren't available to a typical employee.
Sure.
Right? Solo 401ks, SEP IRAs. There's a lot of different ways business owners can sock away a lot of money if that's something they're looking to do.
Yeah, and especially on a tax-free basis, you have to look at the different options out there, right? Like you
Yes.
mentioned a SEP or a self-employed, right, plan.
Correct.
The SEP IRA, that's a good one. So if you're self-employed or an independent contractor like that, there are a lot of things you can do. And I think nowadays, Jeff, more and more people out there are self-employed.
100%. Again,
Yeah.
it kind of goes back to the work from home thing. There was a lot more people doing consulting
Sure.
work. A lot of people, I know clients of mine that retire, they still maintain maybe a contract with their past employer. Maybe they want them to stay on for a little bit longer. They use them on a project basis. So there's a lot of reasons people are employees or self-employed these days that
Yeah.
can have a lot of benefits.
So what are some other strategies for maximizing these tax deductions? What can business owners do?
Yeah, again, the one is make sure you're planning.
Yep.
Make sure you
Have a plan in place.
have a plan and have a competent professional you're working with, either a CPA. Now, if you're working with a CPA, they should specialize in business taxation. CPAs do all kinds of different things.
Yes.
Just because they have that fancy title and they're really smart individuals doesn't mean they're great at personal or business tax filing.
Learned that lesson. My dad and his siblings learned that lesson the hard way when his father passed away and had all this land and the farmland, and it was divided up evenly between the four kids. But then his brother, who was, I guess, the estate executor,
Sure.
and the attorney that had worked with my grandpa just hired a CPA firm. Just some young person in this CPA firm printed out a form and said, "Oh, you owe $224,000 in taxes."
Sure.
But they had no idea about estate taxes or farm inheriting farmland.
Yep.
So there are a lot of caveats to it.
Sure.
And then, so you do want to find someone who specializes, is what you're saying.
Yeah, absolutely.
Yeah.
And an enrolled agent is also a great individual. Enrolled agents really only do taxes. They are tax experts. They have to pass 3 different tests. One is individual taxation. Second is business taxation, and then the third gives them the ability to represent clients in front of the IRS.
Oh, wow.
So they really specialize in tax preparation,
Right.
where a CPA may or may not. So just make sure that
okay.
they have
an
expertise.
enrolled agent.
Correct.
Okay. So what's next?
Oh, what else do we have, Tony? Again, the retirement accounts are huge. Avoid mistakes. The biggest one, we've talked about it as we've gone through this. Keep very detailed records with proper documentation.
Yes.
It's a lot of these deductions are quite substantial. We do a lot of marketing at Paladin, hosting different events that are very costly. You want to make sure
Yes.
you keep proper records so you can deduct these at the end of the year and make sure you're getting reimbursed for all of your business expenses.
Especially if you invite me.
Yes.
I mean, I'm going to run. If you invite me to one of those Paladin events, if I show up, that the food bill and the drink bill is going to be,
Well, good point as well, Tony. You being a friend and a colleague and
Right.
client, there's different ways to write things off. So make sure you're keeping your business expenses separate from your personal. I actually recommend, and I do it myself, I have a credit card that I only use for business.
That's
and another
smart.
one for personal. Yeah, it's
There
an
you go.
automatic way to keep track of things. pull statements,
Yep.
pull information anytime, and you know it's 100% business related.
That is a great idea.
Yeah, that's helpful.
That's a good way to keep them separated.
Yep.
You got to keep them separated, that's for sure.
Absolutely.
So what about future considerations, like tax planning for the future? How can business owners plan for these tax deductions in the future?
Yep. One, and I know we're starting to go through it at Paladin right now, is just planning out your business for the upcoming year. What are your plans? What are your planned expenses? Marketing costs? Do you have new equipment that's going to be purchased? Does it make sense to purchase that maybe in a prior year before year end, or should you hold it over until the following year? So just having an overall business plan will allow you to then incorporate tax planning into your overall business strategy. And again, just be sure you're consulting with that tax professional, your financial advisor, maybe your legal team, any advisors you have. Make sure they're all on the same page, and that really needs to be, kind of headed up and then consolidated by the business owner. Make sure they're interacting with all these people and they know each other as well.
Well, Jeff, that's great advice, and I think when Paladin does its planning for next year,
Yes.
I think you and the other Jeff Foley, you need to fully consider the large raise that you're going to give to your radio show co-host.
Well, it's definitely on the docket, Tony. It's up for consideration, but keep in mind there could be individuals that think we need to reduce costs as well. So keep that in mind.
Well, if you need to free up some cash to pay your radio show co-host more money, I think a good way to do that would probably just be to let Matt go. Matt, I'm kidding. I'm joking. Matt's great. Well, this is a great topic. I mean, obviously, we just scratched the surface, but I think you gave our listeners out there, especially those who are self-employed or own a business, run a business, something to think about and some things that they may not have been thinking about. You have to have a plan in place.
Absolutely. It even comes down to prior to setting up a business, what type of corporation or entity do you want to set up?
Yeah.
We didn't touch on that, but great topic as well, maybe for another day. Should it be an LLC, S Corp, C Corporation? There's different reasons for different types of business entities.
And most of them are tax related, so it really fits into the show.
Yes.
When you're setting up your company, you want to work with a tax professional and maybe even a financial advisor like yourselves, Paladin, to see, hey, what type of corporation should I set up?
Correct.
And for tax purposes, it'll depend on your situation, what the company's going to do, how you're going to be involved, but a tax professional can look at that.
Yeah, absolutely.
Yeah.
Yep.
And what did you call that? An agent?
Enrolled agent.
An enrolled agent would probably be good to talk
They'd be
to
great
about
as well.
that. Yeah.
100%.
Yeah. All right. Well, let's wrap it up, Jeff. I know for our listeners, if they have questions about their own personal tax situation, if we have couples out there on an individual basis or for business owners, how can they get a hold of you?
Sure. Obviously, they can call us locally at 651-842-8406. Anybody would be happy to help them out at Paladin. Of course, look us up on our website, paladin.com, as well, or paladinfinancial.com.
Yes, paladinfinancial.com.
Yes.
And that's a great website and a great web address, by the way. A lot of great resources there. But, Jeff, great show today.
Thanks, Tony.
I appreciate you bringing this one to us. And, listeners, that does it for today's episode of Paladin Financial Talk.